to discuss the issues and challenges of giving financing to small businesses during this era of COVID-19. This is because fund is an essential and the main thing that a business owner need to eventually start the business. This assignment is based on a critical review of what issues that the banks need to counter before approving the financing and challenges that they need to face. The main concern of the assignment shows that banks, as the lender, must make a thorough research before financing any small business because they tend to have small productivity but higher expenses. This assignment has given students a great awareness that it is not easy for a small business to gain financing from the bank. An entrepreneur must have knowledge and proper plan as the economic situation nowadays is crucial, so the bank will not be easily financing a small business that has no potential to pay back and grow their business.
In Malaysia, small business known as small-medium enterprise have conventionally been the backbone of the Malaysian economy, and this hasn't changed in recent decades. According to the most recent available data, they provided 38.9% of the country's gross domestic product and 48.4% of national employment in 2019. Despite their importance, SME are more financially vulnerable than bigger corporations since they have less assets and cash reserves and perform worse in terms of productivity. As a consequence, the COVID-19 pandemic had a significant influence on their lives and livelihoods. According to the Small and Medium-Sized Enterprise Association's Samantha most recent study, 34% of SMEs suffered a major reduction in sales of more than 20% in 2020 as compared to 2019. The objectives of our study contributes to existing literature by providing information and perspectives on the issues and challenges of banks and other monetary institutions giving financing to the SME during pandemic and epidemic COVID-19. This study also contributes to information gathering by demonstrating how MCO and CMCO contracts have harmed nation SME. In addition, such stories seek to fill the knowledge gap and explain key concerns, the value of investing in private enterprises, strategies for organizational adaptation and change, and possible recovery methods for SMEs increase. Now I will explain the terms of our title assignments, which is Giving Financing to Small Business, Issues and Challenges during COVID-19. Giving financing is categorized as the method involved with providing cash for business tasks, buys or ventures. Banks and other monetary establishments are occupied with giving cash to organizations, customers and financial backers to assist them with achieving their targets. Financing is fundamental in each monetary framework since it empowers organizations to procure things that are out of their nearby handle. While small business is categorized as a secret help organizations, associations, or sole ownerships with less specialists and a lower yearly pay than an enterprise or medium-sized firm. The concept of small in terms of eligibility for government assistance and favorable tax treatment varies by nation and industry. Next, the coronavirus or COVID-19 that all of us in this world experience with. COVID-19 is an infection-related contamination caused by SARS-CoV-2 virus. Most patients infected with an infection have mild to severe respiratory illness and recover without the need for special treatment. However, some patients are very ill and may require clinical treatment. In addition, this infection status can affect the socio-economics of any country in the world, especially private enterprises or small business.
COVID-19 is a disease that has taken a toll around the nations. On March 11, 2020, COVID-19 was disclosed as a pandemic by the World Health Organization. It has created substantial behavioral shifts in how people communicate and engage in society. Southeast Asian countries such as Indonesia, Malaysia, and Singapore has enforced border controls, social disassociating, and programs delays for at least 2 weeks in response to the COVID-19 pandemic. Self-employed individuals and small enterprises have had the worst damage by the COVID-19. It is not a surprising fact that many SMEs are facing difficulties due to decreased customer demands. As an outcome, many people are working at residence or shortening their typical business schedules. In the reports of Bank Negara Malaysia figures, SMEs' monetary problems were apparent from July 1st, 2020 to December 31st, 2020, with an average debt-to-equity ratio of 25% and a profit margin of only 5.7%. Most SMEs are insolvent and have no income for at least 3 months following the movement control order by virtue of numerous requirements like employee salaries, leases, and other mandated fees. As a solution, the Malaysian government announced the Prihatin Economic Stimulus Package 2020, which includes a 3.3 billion ringgit fund to assist SMEs to maintain enterprises, hiring, and capital growth. Furthermore, banking firms distribute cash and credit programs have a 3.7% annual funding charge plus assurance cost from Syarikat Jaminan Pembiayaan Perniagaan Berat (SJPP) or Credit Guaranteeing Corporation (CGC).
As we can see, the banking sector managed to cope with the early pressures of COVID-19. Banking sector must be prepared financially and recover successfully as this pandemic is changing the world very fast. The bank need to focus on client demands while still maintaining their performance. The bank started to revise and change their operating system as their handling in the recent months of the pandemic began to slow. When the government announced the lockdown, banking workers used technology to perform the online transaction and continue the bank businesses working from their home. As for the small business, during this era, the need of taking loans from banks is higher because they must struggle to grow and maintain their business. But they also need to be aware that applying for financing is not an easy way because they need to fulfill the criteria and conditions that are provided by the banks. This is because banks also were struggling to sustain their cash and credit flow. It is very hard to just ignore and casually continue the same system when COVID-19 occurs. However, banks must overcome and continue to act as an important entity in helping the customers or client the best as they can. To sustain and manage the crisis, banks must focus on fully helping and understanding the customer's need. At the same time, adapt the situation with good supervision and adjust their standard of procedures to be efficient and resilient.
In our report, we relied on internet research as a platform to gather information on this topic. The data gathered from the credible sources. Therefore, time and resources can be well assured. The analysis does not include quantitative research as it is a broad subject that does not necessarily require a new empirical study.
Next is findings. For the first point is lack of consistent cash flow. The business really needs a stable amount of income to start taking out a loan because the cash flow is really important and needs to be considered by the bank. The bank will be paid late due to a lack of consistent cash flow. If the income statement and balance sheet showed a positive profit that is predicted to increase significantly the following year, banks treated the business seriously. Whether the bank's lending decisions such as short-term and long-term lending are based on information from the cash flow statement. If cash flow issues arise early on, they will have an impact on the future. Moreover, it can cause debt. When the SMEs repeatedly postpone or fail to pay the debt, the bank will place a negative note on the credit report. Finally, if the SMEs actually lack the financial means to pay the payments, the bank may pursue them for the money they owe. The court will examine the assets and determine whether the business are eligible to repay the debt. Therefore, this is normally held as a last option. For the second point is insufficient time for business. Most SMEs take at least 2 or 3 years to become profitable and even longer to achieve success. The bank requires a long credit history with a demonstrated track record of paying on time and meeting financial responsibilities if they are seeking a bank loan. However, in order to begin building credit, the company may require a loan or credit card. Other than that, banks need the personal guarantee who is the owner of the business when making a loan, but if the business does not have any good progressive regarding the profit of the business, overdue payments still will occur. Furthermore, the bank will then start to take more extreme actions. You will start receiving collection calls or letters and emails from the bank after 1 or 2 months of not making any payments. This letter might contain everything from pleasant reminders to threat of legal action.
Third, ability to repay. Bankers found that small business did not have a stable flow of capital so much, so they doubted the ability of SMEs to repay the financing borrowed in the event of irregular income. The government is also urging banks to defer action against SMEs that default on current loans as a result of COVID-19. Banks are more cautious in lending to SMEs as their ability to repay loans is riskier compared to large enterprises. In addition, economic condition has conjointly been shown to own a big impact on SMEs' abilities to repay their loans. Fourth, difficulty in determining credit score. The coronavirus epidemic COVID-19 has a significant influence on global economic activity. It also has an impact on the determination of credit scores for SMEs seeking finance. The scoring methodology generates a credit score based on information from their credit reports. Banks require this information in order to efficiently manage credit risk and limit the chance of loss when lending to SME clients. Banks should consider providing chance and some leniency to SMEs in this area. SMEs must also limit their reliance on banks and instead employ state-created organizations to assist them with the financial and training requirements, such as the COVID-19 Special Relief Fund (SRF) COVID-19. Some of the assessment attributes are used in the technology credit score ranking.
Next is a limited collateral. Collateral is personal or business property ranging from real estate to equipment. It's required for secure business loan or financing. Most traditional financial institutions consider SME as a high-risk group. In most developing countries, bank is often unable or unwilling to give loans to SME. They prefer to lend to large established business with well-developed balance sheet and credit history. Banks take collateral to limit the credit risk. Credit risk is the biggest risk for the bank. It happens when borrower fail to meet contractual obligation. Bank will often require a small business to put property as a collateral for the loan. This requirement can put pressure on a small business. So, for SME, they need to look for alternative sources of financing, such as invoice financing or contract financing. So, they do not need collateral to be considered for credit. Last issue in finding are economic concerns. Banks are always concerned with your own interest. They simply will not lend money to a business if they feel that the current economic conditions are unfavorable for getting the money back in a timely manner. This puts an unfair burden on SME to maintain their revenue and keep costs down when the economy takes a bad turn. For example, it's become a challenge for bank and SME during the pandemic COVID-19. During this difficult time, banks play an important role in providing cash flow support to the needy and to diminish the negative economic impact of the pandemic. Banks also provide appropriate time-bound repayment flexibility so that the borrower or SME will not have their report in the Central Credit Reference Information System affected. Small business owner will have to approach their banks for loan, understand the process that banker go through to evaluate their risk before apply for a loan or financing.
These issues can be concluded that it is not easy to give financing to the small business, especially during COVID-19. There are many things that need to be emphasized, as giving loans to small businesses is quite challenging. Small business owners should consider long-term and responsive financial collapse management strategies, not only focusing on financial factors but also fully considering non-financial factors. If SMEs have any negative items on their financial records, such as late payments, rectify them before applying to increase your chances of approval. Last but not least, the bank must keep track of what information about the outbreak was known or accessible, such as the flow of some businesses during COVID-19, in order to enforce caution when making loans to any businesses, including the SMEs, in order to determine the fair value at the financial statement measurement. Okay, that's all from us. Thank you.